I'm always thinking the market is on the verge of a rollover and a big sell-off, but the things are aligning more and more now that I think at any point here we could see a very explosive move, a very quick move, very similar to this one here, maybe even more powerful, that we could have that same move back up to this 51, 5,200. And I think if that is the case, I think the stock market will be selling off. I think we'll be seeing money coming out of stocks, and then it's going to be looking for money. It's looking for a return. It's going to move into the precious metals space for one last big push. So I think there's a lot of upside in gold, silver, precious metals, and miners once it finally hooks up and gets a bid. Gold has shoots up to this 52 level. I'd be prepared to exit the precious metal space because I do think it will actually put in a significant high and then reverse and sell off with the markets temporarily for quite a while, for a few months or 6 or 12 months.
Gold, in Chris Vermeulen's assessment, is entering one of the most technically compelling phases seen in years, driven by a clear series of bullish formations that reinforce the metal's long-term ascent. While its recent surge pushed prices into an overheated zone, fueled by speculative enthusiasm and a rush into safe assets, the subsequent cooling phase did not weaken the underlying trend. Instead, it tightened the structure and strengthened the foundation for another major upward leg. Vermeulen now identifies upper targets in the $4,600 to $4,700 range, with the potential to extend toward $5,100 to $5,200 if institutional capital steps in during the next breakout. Historically, gold's most explosive runs have emerged during stock market exhaustion, and he believes that same dynamic could be forming again. At the same time, Vermeulen cautions that the broader macro backdrop can produce sharp, sudden reversals. Deep economic slowdowns often force widespread selling across all asset classes, including the ones traditionally viewed as defensive, as investors seek liquidity at any cost. Although the current heavy accumulation by global central banks offers gold an unusual layer of support, Vermeulen remains careful not to assume this cycle will break from historical precedent. Should gold accelerate into the $5,200 zone during a risk-off environment, he views that region as a likely inflection point where a corrective wave may develop. Looking ahead, Vermeulen expects the US dollar to mount a powerful advance, potentially pushing the DXY toward 116 or even 121 levels that historically exert meaningful pressure on commodities once the breakout is fully confirmed. Until then, he sees strategic opportunities in US dollar cash holdings and long-dated bonds, especially as cooling inflation and eventual rate adjustments make those instruments increasingly attractive. While he still anticipates a strong tactical advance in both gold and silver, he stresses that the coming phase will demand flexibility, situational awareness, and an understanding that no trend unfolds in a straight line. For investors tracking these developments, the next stage will reward those who navigate each shift with precision, patience, and a respect for the larger structural cycles now guiding global markets. Now, we present the clips from Chris Vermeulen's interview with David Lin. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
I like gold. It's got a series of bull flags kind of working its way up and to the right. It got a little frothy about a month and a half ago. Everybody was piling in who was open to the concept of moving into metals. And so it's had a pullback and a pause. Overall, this is a very strong chart pattern. I think we've seen gold have these series of it rallies, it pauses, it stair steps its way up. These are called bull flags, which are very strong chart patterns. And the next move from here is actually pointing to, $5,200 per ounce for gold. So we can pull that down. I wish I'd get this blue box out of the way, but you can see we're going about, first level here is going to be the $4,700 for gold. And then I think we could go up here. And I do think, I'm always thinking the market is on the verge of a rollover and a big sell-off, but the things are aligning more and more now that I think at any point here we could see a very explosive move, a very quick move, very similar to this one here, maybe even more powerful, that we could have that same move back up to this 51, 5,200. And I think if that is the case, I think the stock market will be selling off. I think we'll be seeing money coming out of stocks, and then it's going to be looking for money. It's looking for a return. It's going to move into the precious metals space for one last big push. So I think there's a lot of upside in gold, silver, precious metals, and miners once it finally hooks up and gets a bid. But I do think the stock market kind of is going to want to start to sell off first. I think we need to see money coming from somewhere to go into the metals space. And as we know, the stock market is way bigger than the gold market. So when the stock market does have a mass exodus and people are liquidating their stocks, there is going to be a ton of capital that's going to want to push and rush into the gold sector and drive it, I think, up very quickly. And this is what unfolded in 2027 as well. So if this repeats or rhymes again, it is going to mean that if stocks start to sell off, it means I think the top is in. And then if gold shoots up to this 52 level, I'd be prepared to exit the precious metal space, because I do think it will actually put in a significant high and then reverse and sell off with the markets temporarily for quite a while, for a few months or 6 or 12 months. If we do go into a recession and the stock market is selling and home prices are falling, all of that is generally going to start to happen around the same time. People get scared. People start to lose their jobs. They start to see all their value, all their wealth just vaporizing literally week after week. And any little downtick in gold or anything, it is just enough for them to be like, I need to get out. The thing is, when people get scared, the reality is most people don't know a lot about the financial markets. They don't understand how they move and why they move and how to track them and how to know when to own or when not to own something. So when everything they own is dropping in value very quickly, it's very easy to get overwhelmed, get scared, and be like, just sell everything. Just liquidate. I just want to move to cash. I'm tired of losing money. Everything I buy is going down. And they group all their assets into one thing and they just liquidate. And we see that. We see precious metals. We see things that actually are good investments just get pulled down with the liquidation. It's margin calls, it's fear selling. And so you're right, gold could hold up. There is a perfect storm brewing for gold to hold up or maybe even keep going higher as the stock market maybe goes into a huge reset, and maybe the precious metal space never looks back. That's always a case, but I kind of always take the markets one leg at a time, one of these bull flag patterns at a time. I navigate it, I play it, and I don't look too far into the future, because I know I'm not a buy and hold type of person. I want to play each leg, control and manage my risk and my positions, and just walk up with the markets or walk down with the markets, holding the right assets. So typically, just when there's mass selling and global fear, everything kind of gets sold off. And this time could be different because we got, central banks loading up with precious metals. We haven't seen this type of, I don't think, this buying before. So, there could be a case that precious metals hold up or keep on going, and they actually just keep going higher as the stock market melts down. But we don't know, right? So you have to have a game plan. I have a game plan, and that's what I just follow the strategy and go from there. Gold has gone from, a little frothy to nobody wanted it. And it looks like it's put in a beautiful rounding formation. I would say it's putting in a base, or it's bottomed. It looks like it wants to continue to go higher. I think there's potential for a very big move up in the dollar. If we do see some type of big financial problems, we tend to see the US dollar index rally. So that will put pressure on metals. And if this unfolds and this chart pattern is pointing to where it's going, it's showing a very big move in the dollar. I think the dollar could go a lot higher. This is only about to a 110. I think the dollar could go to about 116, potentially 121. And of course, if that's the case, it is going to put a lot of downward pressure on metals and commodities in general. So this is one of those other things that will definitely take a lot of the wind out of the sails for precious metals once the dollar starts to go higher. Now, I think the dollar could trade slightly higher and kind of grind sideways for a little while, for a few more bars here, a few more weeks, and gold ends up putting in a very big run, a big move to the upside. We can see them move together sometimes, and we've seen that a little bit more recently. So it's not out of the question, but eventually, if things get ugly, we're going to see that, I think, the dollar shoot higher, and it'll just be going up so fast, it's going to actually, decrease the value of gold in the US dollar currency.
The broader financial landscape has entered a turbulent phase, with volatility accelerating across multiple asset classes as investors react to mounting uncertainty. Crypto, equities, and commodities have all shown signs of strain, and the sudden $400 billion contraction in digital assets has only intensified the unease. Within this environment, Bitcoin's recent breakdown stands out as a clear reflection of market-wide stress. Technical analyst Chris explains that the chart has been flashing warnings for months, forming a broadening pattern, higher highs and lower lows, that signals instability, indecision, and growing pressure beneath the surface. Each attempted breakout to new highs has reversed sharply, trapping momentum chasers and fueling larger swings on the way down. This latest drop has driven Bitcoin directly into a critical support zone near $80,000, an area where buyers previously held the line but are now hesitant amid fear-driven positioning. The heavy red volume bars indicate a market dominated by emotional selling rather than strategic accumulation, suggesting deeper fragility if this level fails to hold. Chris emphasizes that broadening formations rarely resolve to the upside, and Bitcoin's expanding volatility, failed rallies, and panic-driven declines fit the classic pattern of a market losing balance. Unless strong support reemerges quickly, the risk grows that this breakdown could trigger a more significant corrective phase as leveraged positions unwind and confidence weakens across the entire crypto sector.
Yeah, there's definitely some interesting price levels we could look at. So from a technical standpoint, the trend of the S&P 500 and the NASDAQ are down. They're in a short-term downtrend right now. And so all we're having at this point is a bounce within a downtrend. Now, what's interesting is we've been sloshing back and forth with this emotional roller coaster. So on the 30-minute chart on the left here, you and I have covered this several times. So this red indicator is known as our FOMO indicator. That tells us when people just pile into the stock market, they feel like they're being left behind. They have to buy now because the bottom is in. And so that's what we saw on the S&P 500 and the NASDAQ last week. Everybody piled in at the open, and then suddenly this was on the back of NVIDIA news. And then later in that day, we had unemployment news, which took it the other way. So everybody wanted in the stock market a couple of days ago. Later that session, we had three waves of panic selling that created these three big pushes to the downside. And so these indicators that I have drawn here, when they cross above these blue lines, they are usually extreme pivot highs and lows. And so we can identify the market. So it's going from everybody wanting in to later in the day, nobody wants in anymore. They're bailing out. And on Friday, we ended up closing with the FOMO indicator above this blue line. And when we close above the blue line on a Friday, all the emotional traders who didn't get in, feel like they, over the whole weekend, they're like, I need to get in. I need to get in. They just kind of ruminate on like, I got to get into this stock market. And so that's why we've got this gap up and we're seeing this follow through buying today. It's like this kind of feeding frenzy. And it was interesting because it was just large caps moving the markets early this morning, as you and I were recording this on the 24th. And now it's kind of turned into a kind of a bit more of a broad market rally. We're seeing the micro caps and the small caps participate. And typically when everybody gets into the more speculative plays, that's actually a little bit of a contrarian sign. Now everybody's starting to get excited about the stock market again, and we're in a downtrend. And usually we're going to probably see some more selling. So I don't remember what your original question was, but this market right now is very emotional. And we're coming down. We're testing this very critical support level on the chart right now. We had it fall back a couple months ago. It's bounced back up. It's now come back down to this significant level. And now the big question is, how is it going to trade sideways on this chart? Kind of really messed up that chart. But in the big picture here, we could be putting in a shoulder, a head, and another shoulder. And a head and shoulders pattern is a very powerful topping pattern. And when you break the line that connects the two shoulders, that's when you get a very big precipitous fall. Usually the height of from the top of the head to the neckline gives us the downside target of where it could go. So we could see the S&P 500 potentially, if we break down over the next month or so, down to like $614 per share, which is about a 7-8% correction from where we are. So we really just need to sit back. We moved to cash a couple of weeks ago. We moved to the sidelines because the market was saying it didn't know what it's doing. And now we're seeing it with our tools, our indicators, that the emotions are all over the place. Nobody knows where it's going. And that's why we step aside. We don't need to get involved in this scenario. But if you notice the moving averages, David, the 50 days starting to slope down. The 20 days clearly sloping down. The 5-day moving average is now below the 50-day. So the momentum that has always kind of been up and to the right, it looks like it's actually coming to an end for a significant correction. And so we could be very close to something bigger than just buy this little dip and you're good. A week or two from now, I think it could be you buy this dip and you might be underwater for a long time. There's a lot of panic selling going on. It's definitely pulling back into a pretty critical support zone. And when you look at this price action, I think you and I had talked about this a while ago. I wasn't a fan of Bitcoin because it has this broadening formation of series of higher highs, lower lows. It's meaning there's more volatility. It's increasing in risk and volatility on every wave. Every time it makes a new high, it gets rejected. It becomes a fake out. And then it makes a lower low. And then it finds a bottom and rallies. And so it's a terrible pattern, very difficult to trade. It's not worth trading. And they usually resolve to the downside. Eventually, it's just showing instability. It's in between buyers and sellers. And we ended up finding it breaking to the downside, and it's picked up speed. You can see the volume. There's a ton of selling going on, a lot of fear in the space. And it has dropped right down into that kind of around the $80,000 per Bitcoin mark, which is kind of in this blue box. This is where a significant breakout took place back in 2024. It's a major bottom that we found earlier this year. And so it's just dipped down into that level where there will be a bunch of people saying, hey, if it drops into this range, I'm going to buy some more. People who bought it back in March and April. And there'll also just be other traders who look at it and say, well, if it falls here, this is a previous support level, I'm going to buy it. So right now we're just having a technical bounce. It's in a downtrend. There's a lot of selling. And it's just a bunch of buyers who are trying to pick a bottom here, and they're buying it at a support level. So it's getting a little bit of a bounce. The big question with Bitcoin is what is going to happen next? And that's where we need to figure out, is it just going to trade sideways and really flounder and then eventually kind of break down and go for another swan dive? Or is it going to have a fairly decent bounce? And is it going to play out for a couple months? I think it's going to follow the stock market. I think if the stock market struggles here and rolls over, Bitcoin is going to break down and we'll probably be headed down to the $60 or $50,000 mark very quickly. But if the stock market does bounce, I do think we could see Bitcoin bounce. I wouldn't trade it for the bounce. So right now the trend is down. You don't want to try and pick a bottom. So I wouldn't trade the bounce. I'd be more inclined to potentially look to buy an inverse or play the downside. If it does bounce up and starts to roll over, I would look for some type of pullback and kind of go from there, or wait for it to start to break down through this level again and then potentially jump on board, because this is an emotional asset, very emotional asset. And once it starts to break a very critical level, everyone starts to bail out on the trade very quickly. And it'll sell off. It'll be like a landslide, just like this last one. It'll be a string of red bars with huge volume. And there's enough momentum and enough people that panic in Bitcoin at the same time that it'll create a big move. There's the same waves in Bitcoin to the upside and the downside. When it breaks out and starts to run, they all jump on and they drive the price up. When it breaks down, they all panic and they bail out. And so there's very good opportunity in Bitcoin because of that. And we've traded it a few times recently because of these strong moves. And there might be a really nice breakdown here in the next month or so.
With momentum building in the precious metals sector, both gold and silver are poised for a significant rally as investors increasingly seek safe haven assets amid ongoing market uncertainty. Gold's technical formation suggests that once buying pressure fully returns, it could surge toward higher levels, pulling silver along due to their historical correlation and silver's additional industrial demand. The coming weeks may bring sharp, rapid moves in both metals, driven by renewed institutional interest and a flight to tangible assets, creating a potentially volatile yet lucrative environment for those strategically positioned. With that said, the path for gold and silver will likely include intermittent pullbacks, particularly if broader financial stresses or sudden liquidity needs arise. These corrective phases may temporarily cool the advance, yet they do not alter the overarching bullish trajectory supported by growing central bank accumulation and cross-border shifts favoring precious metals over fiat currencies. Investors who remain disciplined and adaptable, recognizing these cycles and the interplay between gold and silver, could see substantial gains as the metals respond to both market dynamics and the evolving macroeconomic landscape. Let us know what you think in the comments. And if this video offered new insight, don't forget to like, share, and subscribe for more updates on this unfolding monetary revolution. Thanks for watching.